Hi, Derek Whittaker from Blue Sky Factory. Is options trading dangerous? That question I've been asked before, and it's a really, really good question. Well, let me put it to you this way. 1, define danger. Number 2, is a sharp knife in the hands of a 4-year-old dangerous? Absolutely. Let's look at that. Why? Well, simple, because they don't have the motor skills and the fine motor skills and the experience to know how to handle a sharp knife to cut the fruit or whatever it might be. They need to be trained, they need to be developed in terms of the skill set, and they need to be taught and shown. And so it is with stock options trading. For those who haven't been shown how to do it properly, who haven't done the research, haven't been learning and doing the due diligence, then yes, potentially that is a very dangerous thing to do. But let me also share this with you. And that's this, that stock options were actually put onto the market to create more safety for traders. That's right, that's the original design, was to actually what we call hedge positions, so that if they didn't go the way of the trader, there was something that they could fall back on, which is really, really phenomenal when you think about it. Often the problem is when a trader takes on more risk than they should and do what we call speculate. In other words, they put on what we call a Hail Mary pass at America, where they just throw the ball up into the end zone and hope somebody on their team catches it. And that's where they run into problems. If you look at an insurance company, all right, most people will take insurance out if they drive a car. If you ask people in a room of 200, there's about 1 or 2 who may put their hand and say they don't. But the majority of people are doing that for 2 reasons. 1, they're doing that to protect their wealth. That if something occurs, that they know that they won't be wiped out and go bankrupt. If they hit a building and it causes $1 million worth of damage, that is hedged. And the second thing they're doing it for is peace of mind. It's a similar sort of situation for an insurance company. So look at how they assess you when you take out an insurance company. They ask you a dozen questions. They do due diligence. They go, how old are you? They look at the risk in terms of, are you the only one driving the vehicle? Where are you located? Do you drive often? How many Ks do you do a year, etc., etc. And they're doing all the assessment in terms of the risk of whether to take you on. Are you a good person to get behind and insure? But an insurance company will also do this. It has various strategies to hedge its risk or maintain, kind of protect its risk. And one of those is it will get out under insurance. So it will buy its own insurance that if it all falls to pieces, they've got a backstop. They know that risk will be hedged at some point. And that gives them safety, peace of mind, and also hopefully prevents bankruptcy, because we want that insurance company to be in the game to service all those people who are making claims. That's what makes that insurance company viable and a good business. So I hope that provides a bit more understanding for you in terms of stock options trading. Is it dangerous? For those who don't know what they're doing, it potentially can be. For those who've done it and look at it and been trained in it and studied it and practiced it and done due diligence, then it provides more safety. Give you an example. The wealthy generally don't like unnecessary risk. So what they do is they do a ton of due diligence to understand what it is they're actually getting into, and also looking for strategies on the way out. How can I get out of this? How can I manage this? It's easy to get in a deal, but often people don't look at how to get out of the deal if it goes wrong. And they understand the ins and outs, and they put all that due diligence into it to then put the odds in their favor. You know what, I've done my homework, I understand, I've asked the hard questions, I've looked at if it can potentially go wrong, what are the clauses, what can we get out, etc., etc. And all that due diligence protects them from taking that risk on. And they might only allocate just a tiny portion of their overall wealth to that one strategy. So I hope that helps you in terms of the question of risk, and I hope it helps you in terms of your understanding about stock options trading. Can't wait to catch up with you next time. If you have questions for us, get in touch with us with our website, Blue Sky, BLU, skyfactory.com.au. Leave us a question and we'd love to answer it for you. All right, till next time, we'll catch you soon, and all the best in terms of furthering your wealth education.